Similarly, your company launched a global chess league. I think it was more to demonstrate our association with knowledge, our association with creativity and innovation, and that global chess league, uh, which was the maiden event this year, has worked out very, very well. I mean, our overall connect with the audience, overall about 22 broadcasters covering it globally, are, the whole tournament proving that the world is all about hybrid, physical and digital, online and offline. And I think we brought in technology uh, to the heart of the Global Chess League. And Tech Mahindra is proud that we started that Global Chess League. Overall, I can say that the focus this quarter has been adding a generative AI studio. We are clearly committed to not only the new changes in the generative AI, but the opportunities that it brings to the table. Uh, Technology meeting the domain and solutions becoming more important and the speed of execution becoming more important. So the company continues to not only invest, but we are also upskilling. Uh, so this year, rather this quarter, we have upskilled about 8,000 associates in generative AI. We are working with some of the leading technology players in partnership. We have announced few of our solutions with our leading partners. And all I can say is that from my perspective, networks, generative AI, cloud, cybersecurity will continue to define the way we build the company. I know I have already shared with you, it was a tough quarter. Revenues are down 4% sequentially. A major part of it was because of the drop and the headwinds in the CME business. Overall, I can say that while the drop could have been anticipated, but I generally believe that some of the macro environment and stretchy deal conversion cycles, particularly in CME, have impacted, and that obviously means the balance between the supply chain and the actual performance. The numbers are not very satisfactory on the EBITDA front also. So I can only say that my belief is that some of the challenges are temporary. We will bounce back over the next few quarters. This quarter probably is one of the toughest quarters I have seen in the last 5 years, but we believe that we will be able to bring back our growth trajectory over the next few years. We have a great service offering, we have a great team, we have a robust pipeline of opportunities across all geographies, verticals, and service lines. And we have, more important, a close customer association with almost 1,300 customers. So that gives me the confidence your company will continue to be in the forefront of innovation, forefront of agility. And I again want to reiterate that the current challenges are temporary and we will come back stronger. We have a solid foundation of people, customers, capabilities, assets, and values. So, Rohit, I know you don't have the best of the news to share, but clearly, if you can take them through the numbers, please.
Sure, Steve. Let me take you through more in details of the quarter financials. So we ended the quarter with $1,601 million of revenue versus $1,668 million last quarter, which is down sequentially 4%. Now, most of the decline is driven by communication vertical, which declined 9.4% sequentially QOQ, and enterprise declined marginally by 0.4%. Our TCV deal wins were at 359 million, which was down QOQ as well. Revenue in terms of INRs were 13,159 crore versus 13,718 crore in Q4, reducing 4.1% QOQ in INR terms. The EBIT for the quarter was 108 million versus 186 million last quarter. The EBIT margin was at 6.8%, a drop of 440 basis point, driven by revenue drop for the quarter that we saw 4%. There were some one-time provisions that we to take in the quarter, and seasonality that we see in our business in Comviva that is typical in 1Q versus the fourth quarter. Moving below EBIT, our other income for the quarter was at 23 million versus 37 million for Q4. Forex gain was 5.4 million versus 0.8 million in Q4. The effective tax rate for the quarter was 27.6%, and the PAT for the quarter was 84 million, 693 in rupee terms, crores. And net margin, profit margin for the quarter was at 5.3%. Our free cash flow for Q1 was 106 million, 126% of PAT. DSO increased by 2 days to 98 days compared to Q4. As mentioned earlier, we continue to consistently follow a hedging as per the rule book. As of June 2023, a total hedge book was 2.7 billion versus 2.3 billion in Q4. Based on hedge accounting treatment, net mark-to-market gain as of 30th June was 33 million, out of which 8 million was taken to the P&L and the balance 25 million was taken to reserves. We had cash and cash equivalent of 939 million, which was 7,701 crore as of 30th June, which was an increase quarter over quarter. In summary, I would like to iterate that our commitment in terms of execution.
Right.